Hey everybody, this is Jim at SP500chart.com. It's about 3:30 in the afternoon on the 1st of November 2015. We're going to take a look at the S&P 500, see what happened during the week that ended October 30th, 2015. But before we do so, I need to remind you the website in this video are for educational purposes only. Nothing stated at the site or in this video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. And since this is the weekly review, we're going to start out by taking a little bit broader look at things to see where we are with respect to the chart over the last couple of months, 2 or 3 months. I mentioned there are a number of lines on this chart that we are currently over, and I think they are technically important. This line, for example, I believe that's technically important. We are over that line. That line was drawn over the high that was in place just before the head and shoulders top broke down underneath this neckline. Okay, and the midpoint of what I'm sort of calling a double dip or a double bottom. I don't like that term because it's not a bottom, but it's, for lack of better terms, most accurately describes what it looks like. So I'm calling it a double bottom. So this point and this point, there's our trend line. We got over that actually about a month ago. And remember, we said that if we could get over this line, then we would certainly or almost certainly come back to attack this midpoint line. And remember, if we got over that, then we would almost certainly come back and tag our extended neckline from that head and shoulders top, and we got over that too. This is the line that really should have put up the most fight, and as you can see, the S&P really sort of dispensed with that line rather, what's the word I'm looking for? Unceremoniously, just kind of like, oh, whatever, and got over it. We spent the week really, for the most part, the week didn't go much of anywhere. If we zoom into this chart so that we're looking at little, so that our candles are enlarged and we look at it on a weekly basis, there you go. There's our week right there. If you look at it on a weekly basis and you're a candlestick reader, you know that this definitely looks like a pause in the action. I believe the term, I'm not a candlestick expert, but I believe the term is doji, or some people call them a spinning top. It's basically a fairly short bottom to the top of the candle and with a very, very small, what's called a real body. This is a large real body because that represents a large move off the bottom. This is another large real body. This is a small real body. And a lot of times, these candlestick patterns will give you a little bit of an idea about what's happening just by the shape of the candle. However, I want to caution you. Remember, those candlestick chart patterns all require a second day of confirmation, or if you're looking at it on a weekly basis, a second week of confirmation. In other words, you need to see the next candle. However, I think in this case, it does look like the markets came up after a nice rally off those lows in the 1880s. Actually, I believe we were hold on just a second, I believe we were in the 1870s. Yeah, 1872. These lines slope up. It makes it look like this is 1880, but it's not. So anyway, it makes sense to have a pause in the action at some point, and it would not surprise me if in the next week we will see some weakness. Just wouldn't surprise me. I will remind you that we have lines underneath us that should give us good support. This line right here in particular is a strong candidate for support, right at about 2020. Then we have the mid 2040s. What's that? The mid 2040s is that old neckline. We're over it now. but and we are over it by a technically significant margin. So getting back over this line, I think you could probably say that that should now flip to some support. But I kind of question how important or how strong that support would be based upon the fact that it didn't really give us much of a headache to get over a week before last. We also have possibly a rising support line here. This line is something to watch going forward. But the gist of this thing is we ran into two resistance lines this past week near the end of the week. This action all makes perfectly good sense. But I will remind you that despite any weakness we might see in the week of the first week of November, and it's hard to call. I'll be honest, it's hard for me to say the first week of a month is going to be big, is going to be small, is going to be weak, because a lot of times those first weeks they like to start off strong. But I guess what I'm saying is, regardless of whether we come down to here, 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 or here, we have a target up here. And that target is at about 2188. So as long as we don't come plowing down through any of these support lines, that target should remain as just that, a target, the minimum target, in fact. So I am looking for either a Santa Claus rally or something, an end-of-year rally that ends up putting the markets into new high territory. How long can this go on? Well, it's kind of difficult to say, because when you're in, assuming we make that move and we get up to 21 into the 2180s, that will be open waters. Call it uncharted territory. We do have some extended lines that we will bring into play if we get up there. For example, this one right here. That would certainly be an impressive feat if sometime in 2016 we got up to tag this line again. Is that impossible? Absolutely not. It is not impossible. This market still has some strength to it, but you also will see a pattern on this 3-day chart that's maybe viewed a little better at the 2-day. We'd always want to keep our eye on the possibility of a bearish pattern developing that is masked by what appear to be bullish patterns. And there is a possibility that if we fail to make this target, and if we fail to set a new high, then we could be looking at a very large and fairly impressive head and shoulders top. Okay, this would be the left shoulder, which took roughly, just a little bit less than 9 months to make. Then we would have the head that took roughly a little less than 1 year to make. And if there is a possibility that we are now in the process of forming the right shoulder, what would invalidate the idea of a head and shoulders top would be a solid new high. That would pretty much lay that potential pattern to rest. Finally, I think you'll remember we snapped this trend line on the chart some weeks back, sort of speculatively, and this line was placed there primarily because it was parallel to this top line, which is well formed, and it ignores a couple of panic lows that we had, for example, back in the spring, or not spring, but actually very late winter of 2009, and then again the lows we saw in the fall of 2011. But I was just thinking, we've got 1, 2, 3, 4 things that line up very well, and they're all parallel to this top line. And it appears now, based upon whether or not we make a new high, it appears, however, that this line was worth putting on the chart, because that is almost exactly where we bounced back in late September. So going into the week, what am I looking for? Well, I'm prepared for some weakness, frankly, but I would be looking for any of these lines underneath us here as support. So we've got 4 of them. We've got one that's rising in this channel right here. We have another one that is pretty much horizontal, which is the old extended neckline from the head and shoulders top. Then we have this one right here, which is the line that I showed you drawn over the last peak before the right shoulder turned over on the head and shoulders top. And then that mid pattern of that quote double bottom, that mid peak. And then of course we've, that is the, and this is our mid peak line, This does not touch the mid peak. This is the 4 or 5 touches in July and August. Got that wrong. This is the line that's the mid peak line. However, you can see that this line and the mid peak line right here are due for an intersection in about a week and a half to 2 weeks. If we zoom in and look at a 5-minute chart, be honest with you, I don't think there's that much we can look at this week and say, yep, look at that pattern. It's, I don't think it's really there. If you want to try to find something, you might say sort of an ascending wedge, which would just go to be one other piece of evidence potentially for the fact that we are now at a level where we would expect some resistance. So really the week was just sort of, I don't want to say, there weren't very many calls to be made this week. So there weren't many calls to be made. The good news is we are in pretty good shape for the fact that we are now 1, 2, 3, 4, 5, 6, 7 days over this line. We are 7 days over the midpoint peak line of the double bottom, and we are 1, 2, 3, 4, 7 days over the extended neckline of our old head and shoulders top. I think all of that speaks pretty well. So just the last thing to say, if there's a line underneath us, support. If there's a line above us, resistance. I think that makes it pretty simple. So guys, thanks for watching the video. And as always, thank you for your very kind support. Take care.